Hi, my name is Mark Walton of forex-fxtrader.com. Welcome to our experimental daily signal service. I say experimental because I trade forex very successfully from 4-hour charts. I then use a 1 hour and a 15-minute to refine entries. However, I have a lot of followers on the blog and on Twitter who are unable to trade during the day because of work commitments, family, etc. So they've asked me if we can look at a method of trading daily charts. So as I say, this is an experiment. This is educational. This is not for anybody to put any money anywhere near this. We said that what we will do is for 2 weeks I will post a daily video. I will show you what I'm looking for, and I will give you advice as to what you need to look for future. If the experiment works, then at the end of the 2-week period, we may convert it into a proper signal service. But as I say, for now, this is educational. This is for you to learn what to look for. It's not the best time of year because a lot of the markets have been going sideways. However, we'll give it a try. I'm going to try 5 or 6 different strategies that I use, and at the end of this trial period, sit down and work out what would be the best way forward for you. Now, when I look at a daily chart, it's actually no different to the 4-hour really. What I'm looking for, first off, I look at candles. And for example, on this chart here, we have candles. This candle is what's known as a bullish candle. The body of the candle is less than twice, the wick is twice the length of the body. And more importantly, that the candle has come down and touched a previous support area. And forex trading for me is all about support and resistance, bounces off and breakouts through. And in these 2 examples on the charts here, we've got some good examples of both. The Euro GBP, you can see here, bounced off a few weeks ago. This is a very bullish, as in price going to go down, candle. And the most significant part is that it bounced off a very important area, which was the psychological area of 8,700. So we are looking for candle formations primarily near support and resistance areas. Again, this could be said to be a bullish candle. It's not actually, the wick is not twice the length of the body, but it's near. And importantly, this was a significant area. We had what was known here as a double bottom. And if we move further out and have a look at this chart from further back, we can see that price around this 6,200 area reacted significantly to what was going on. As you can see, this pair has been in an uptrend going back to April. So we're in a long-term uptrend. What has happened recently is that price was resisting at this area here. We've had some horrible spikes up where price has tried to get higher, but it's rejected every time until last Friday. So this could be seen as a breakout. Now, as a breakout trade, when I look for breakouts, what I normally do on a chart is to look for a pullback. So I expect that the price to break this area, but then to come back down. And this is what's known as a breakout pullback. What you will see here is price came up, touched, pierced through but fell back, touched, and then finally on Friday actually broke through. And the one negative thing with this candle is that this fact that you have big wicks either side makes it almost a spinning top, which means that there is still indecision. So if I was to look to go take a trade up on this, I would be wanting price to come back down to this area before moving on away. I'll carry on this explanation in the next video. If you are not sure what all this is about, these are different indicators I use, then if you go to our blog site here and fill in your name and email address, I will send you a free ebook which explains what all of this is about. Right, on to the next video.